Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hi everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar rebounded and moved back towards that 71 cent level, close to the recent highs. That was around 71.5 after the Reserve Bank of Australia lifted the cash rate by 25 base points to 4.10% in a closely split decision, while maintaining a hawkish tone and leaving the door open to further tightening if inflation remains persistent. Governor Bullock emphasised that inflationary pressures were already elevated before the Iran conflict, reinforcing the view that the RBA's stance reflects domestic price pressures rather than temporary geopolitical shocks. Meanwhile, the US dollar index, which measures the greenback strength against a basket of 6 major currencies, was a little bit softer after previously falling from 100, now dropped from 99.5 to 99.20, where it now sits ahead of the Federal Reserve's rate decision, which is widely expected to leave rates on hold. So from the technicals, we're pretty much in the middle of the range. Any upside attempt is likely to be capped by 71.5, and any pullback still finding good support around the lows of 70 cents. In light of the technical pattern, they are still a little bit weak, so I'm not overconfident that we're going to further break beyond 71.5, so we may see this continuous sideways pattern to linger on and maybe see a rejection and pull back. Turning to the euro, well, the market has recovered clearly from that key level of 113.55.80 because of the weakness of the dollar. Nevertheless, all eyes will be on the European Central Bank this week and also the Federal Reserve, where they're expected to keep rates on hold around 3.5 to 3.75. Although rising oil prices are complicating the outlook by keeping inflation elevated, it's still expected to see both the Fed and also the European Central Bank to keep rates on hold. If this rise continues for the euro, let's see if it can challenge the level around 115.45 and break beyond to 115.85. But towards 116 might be a bit of a challenge. The technicals are still weak and the trend is still sort of playing to a bearish role. So this could be just a relief rally and then maybe see a little bit more pressure back towards that bottom side around 114.45. And as I mentioned, the key area, the 113.55.80. Still a little bit nervous to the fact that we could be seeing a bull trap soon as the market is struggling to uphold above 159 as it lingers there. The technicals have broken down. Let's see if we can see a weaker play into today. A break of 158.75 could be that to trigger the move down to 158 lows to 157.5 and reassess. Sterling outlook, the market is also recovering, but there's a trend line here around the 134 figure 15 area that may struggle beyond there. Technicals are weak, and I'm not overconfident that this bounce will hold, but nevertheless, let's see how it plays into today. And if we can get the break, then we could see a further climb. Wrapping up with commodities, still weaker play for when it comes to gold, but pretty much unchanged as it hovers around 5,000. This risk is still to the downside where this trend line holds around 4,835 to 55. Let's see if the market can, as previously seen, rebound from there and correct back towards 5,200. And oil, well, the market is still holding relatively well in terms of the fact from the geopolitical risks that eyes are still remaining around that highs of 98 to 100. Nevertheless, like previously seen here, I'm a little bit cautious of possibly seeing a bull trap placed, and if so, whipsaw price action will be in tow. Do be careful if you are trading this market. The RSI is breaking down, so I feel upside attempts may soon fail. That's a wrap. Thank you for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to the day.